Welcome to the deep dive. Get ready to be surprised because today we're diving into a company that's quietly become a stock market darling, a real hidden champion. You might not see their logo on your coffee mug, but trust me, you've probably interacted with their software without even knowing it.
Oh, really?
Yeah, get this. Their stock has skyrocketed almost 2,000% since 2003.
Wow.
Any guesses who we're talking about?
2,000% since 2003. That's the kind of performance that makes investors drool.
Yeah.
And you're right, most people wouldn't recognize the name.
Okay, lay it on us.
Wolters Kluwer.
Wolters Kluwer. I have to admit, I wasn't familiar with them either until we started prepping for this deep dive. So for our listeners, what does Wolters Kluwer actually do?
They provide what they call expert solutions, software and information platforms for some of the most crucial professions out there. Lawyers, doctors, accountants, tax professionals.
No, okay.
Basically, anyone dealing with complex regulations and mountains of data.
Okay, so not exactly the flashiest industry, but essential nonetheless.
Yeah.
And they pulled off this massive stock surge. There's got to be more to the story.
Oh, absolutely.
We've got excerpts from a Dutch business analysis that breaks down just how they pulled this off. Let's unpack this.
What's fascinating here is that Wolters Kluwer is over 185 years old. They started out printing books, can you imagine?
Wow.
And they managed to reinvent themselves for the digital age.
Wow, talk about a legacy business adapting to the times. It's kind of mind-blowing that a company that old not only survived the digital revolution, but thrived in it.
Right.
So how did they transition from dusty bookshelves to cutting-edge software?
Well, their secret sauce is this blend of deep content expertise, strategic tech adoption, and a laser focus on their customers' needs.
Okay, I'm intrigued. Break that down for us, starting with the content expertise.
For over a century, Wolters Kluwer was the go-to source for specialized information legal statutes, medical research, tax codes. They were compiling and refining this stuff long before the internet even existed.
So they were already sitting on a gold mine of data, but content alone doesn't guarantee success in the digital world, right? I mean, plenty of libraries are filled with books, but they're not exactly raking in billions.
You're exactly right. And that's where their understanding of their customer base comes in. We're not talking about casual users scrolling for fun. These are professionals, lawyers, drafting contracts, doctors, diagnosing patients, accountants, crunching numbers. Accuracy and efficiency are paramount to their work.
So Wolters Kluwer recognized that their customers weren't just looking for information, they were looking for solutions.
Right.
Yeah.
Precisely. They realized they needed to package their content in a way that made these professionals' lives easier, helped them make better decisions, and ultimately gave them a competitive edge.
Okay.
And that's where the tech piece of the puzzle comes into play.
Okay, so they had the content, they understood their customers, and they realized they needed to embrace technology. What did that actually look like in practice?
They started building what they call integrated expert solutions, basically software platforms that did more than just present information. These platforms could analyze legal documents, track regulatory changes, and even provide personalized recommendations.
So they were moving beyond just being a source of information and becoming a true technology partner for their customers.
Exactly. Think of it like this. Imagine you're a lawyer facing a mountain of legal documents. Wolters Kluwer's AI can sift through that in minutes, identifying the most relevant precedents and saving you countless hours of research.
That's where it gets really interesting, right? They were early adopters of AI long before it became the buzzword it is today. Were they buying up AI companies left and right?
Well, they weren't just throwing money at the problem. They were strategic.
Right.
The analysis highlights over 100 acquisitions, bringing in expertise in specialized software data analytics, and yes, even AI. But they were also smart about selling off parts of the business that didn't align with their digital focus. It was a constant evolution.
So they were actively shaping their business for the future, not just reacting to trends. I'm starting to see how they achieve such remarkable stock growth. But we've only scratched the surface. There's a lot more to this story, especially when it comes to the specifics of their strategy and financial performance.
There's a lot more to unpack, and trust me, some of the insights from this Dutch analysis are pretty remarkable. We'll dive deeper into those after a quick break. Wolters Kluwer's strategic approach is a masterclass in navigating a complex and evolving industry. They didn't just stumble into success. They carefully analyzed their competitive landscape.
They were doing their homework. Did they use one of those classic business school frameworks like Porter's 5 Forces?
They did, and they really put it to work. For instance, they recognized that rivalry among existing competitors was fierce. They were up against giants like RELX, the parent company of LexisNexis and Thomson Reuters.
Okay.
These are not companies you want to mess with.
Okay, so the competition was intense. How did Wolters Kluwer carve out a winning strategy in such a crowded field?
That's where their deep understanding of your customer needs became a real differentiator. They knew their customers weren't just looking for the cheapest option, they were seeking reliability, accuracy, and seamless integration with their workflows.
So it was less about being the cheapest and more about being the best, the most trusted partner?
Exactly. And they doubled down on what they call their integrated expert solutions approach. This meant not just providing raw information, but also building platforms that helped professionals analyze, interpret, and apply that information effectively. They focused on solving real-world problems for their customers.
That makes sense. If I'm a lawyer up against a tight deadline, I don't want to waste time sifting through mountains of data. I need a solution that gives me the precise information I need when I need it.
Precisely. And that's where their early adoption of AI comes in. They saw the potential of AI to automate tasks, enhance accuracy, and ultimately make their customers' lives easier.
You mentioned they did over 100 acquisitions. Was there a particular acquisition that stands out as a game changer, one that really propelled their AI capabilities forward?
One that comes to mind is their acquisition of Enablon back in 2016. Enablon was a leader in environmental health and safety software.
Interesting. So they saw the growing importance of sustainability and responsible business practices even back then.
Yes. They recognized that this was becoming a critical area for their customers, particularly in industries like energy manufacturing and transportation. And Enablon had the technology and expertise to help companies manage their environmental impact and comply with increasingly stringent regulations.
It sounds like a perfect example of how Wolters Kluwer identifies emerging trends and strategically positions itself to meet evolving customer needs.
Absolutely. They're constantly scanning the horizon for opportunities to expand their expertise and offer new solutions. But they also recognize that acquisitions can be risky. They're very deliberate in their approach, ensuring that the companies they acquire align with their overall strategy and can be integrated effectively.
Smart move. There are plenty of cautionary tales about companies that go on acquisition sprees and end up with a jumbled mess.
Yeah. Right. It's not just about collecting companies like trophies. It's about finding the right pieces that fit together and create a stronger, more cohesive whole.
So their expertise in key areas like law, healthcare, and finance gives them a pretty wide moat, wouldn't you say?
Absolutely. But they don't take that moat for granted. Remember their analysis of the five forces? Well, one of the most interesting insights was their assessment of the threat of substitutes. They acknowledged that in a world where information is increasingly accessible online, they couldn't just rest on their laurels.
Some might argue that legal research, for instance, is becoming increasingly commoditized. How can Wolters Kluwer maintain its edge in a world where free information is just a Google search away?
That's a challenge they're very aware of. And their answer is to constantly innovate and add value beyond just raw data. They're investing heavily in AI, machine learning, and data analytics to create solutions that are more sophisticated, more intuitive, and more tailored to their customers' specific needs.
So they're not just fighting against substitutes, they're trying to stay several steps ahead of them.
Exactly. They're making it so compelling for customers to stay within their ecosystem that the allure of free information simply pales in comparison.
It's like that old saying, you get what you pay for. In a world where information overload is a real problem, having a trusted source that curates, analyzes, and presents information in a way that's actionable is incredibly valuable.
It is, and they're not afraid to venture into new territory either. They recently created a new division focused on corporate performance and ESG, environmental, social, and governance issues.
That's a hot topic these days, especially in the corporate world. It feels like every company is scrambling to figure out their ESG strategy. What's Wolters Kluwer's angle on this?
They recognize that their expertise in areas like compliance, risk management, and data analytics could be applied to this growing market. They're helping companies measure their environmental impact, track their social responsibility initiatives, and ensure they're adhering to good governance practices.
So they're not just providing data, they're helping companies tell their ESG story in a way that's credible and compelling.
Precisely. And they're doing it in a way that's integrated with their other solutions. So, for example, a company can use Wolters Kluwer's platform to track its carbon emissions, comply with environmental regulations, and report its ESG performance all in one place.
Wow, that's impressive. It sounds like they're really positioning themselves as a one-stop shop for everything ESG. And it's a smart move because this trend isn't going away anytime soon. Investors are demanding more transparency, consumers are voting with their wallets, and regulators are cracking down.
You're right. ESG is becoming increasingly central to how businesses operate, and Wolters Kluwer is right there on the front lines, helping companies navigate this complex and ever-changing landscape.
It's a great example of how they're able to leverage their existing expertise and apply it to new and emerging fields. They're not just sitting back and watching the world change, they're actively shaping it.
And that's where their dynamic capabilities really shine. They're constantly sensing changes in the market, seizing opportunities, and transforming their operations to maintain their competitive edge.
You mentioned their longtime CEO, Nancy McKinstry, steps down in 2026. How do you see this leadership transition playing out? Is there a risk of them losing momentum?
It's certainly a big change, but I think Wolters Kluwer is well prepared. McKinstry has built a strong leadership team and instilled a culture of innovation throughout the organization. They have a deep bench of talent and a proven track record of successfully integrating new leaders.
So you're not too worried about a post-McKinstry slump?
Not at all. In
Huh.
fact, I think this transition could be an opportunity for them to inject fresh perspectives and accelerate their growth even further. Remember, one of their key dynamic capabilities is their ability to adapt and evolve. They've shown they can successfully navigate change, and I expect they'll continue to do so in the years to come.
It sounds like they're a company that's built to last. But all the strategic maneuvering is great, but did it actually translate into financial success? Let's get down to brass tacks.
That's the million-dollar question, isn't it? And the answer is a resounding yes. Their financial performance has been phenomenal. We'll dive into those impressive numbers after the break.
All right, we're back and ready to talk numbers. We've covered Wolters Kluwer's incredible transformation. But did all this strategic genius actually translate into cold, hard cash?
Let's just say their financial performance over the past decade would make any investor do a double take.
Okay.
They've consistently outperformed market expectations and delivered impressive returns for their shareholders.
Give us the highlights. What are the numbers that really jump out?
Their revenue growth has been phenomenal. Back in 2013, they were bringing in about 3.6 billion euros annually.
Okay, a respectable starting point, but I have a feeling that number's going to get a lot bigger, right?
Fast forward to 2023, and their revenue had soared to 5.6 billion euros.
Wow.
We're talking a 55% increase over a decade. That's a remarkable growth trajectory for a company of their size and in a mature industry.
That's not just growth, it's a full-blown surge. What were the key drivers behind this impressive revenue expansion?
A big chunk of that growth was organic, meaning it came from expanding their existing businesses, not just from acquisitions.
Right.
This tells us they're not just buying growth, they're cultivating it from within.
So they're firing on all cylinders. They're growing their core business while also strategically acquiring companies that complement their strengths. But revenue is just one piece of the puzzle. What about profitability? Are they actually converting that revenue into profits?
This is where it gets really exciting. Wolters Kluwer is a textbook example of how a company can leverage the scalability of software and data solutions to supercharge its profitability.
I have to admit, I'm a bit rusty on my business school jargon. Break that down for our listener who might not be a financial whiz.
Sure.
Yeah.
Think about it this way. Once you've developed a piece of software, the cost of producing additional copies is practically zero.
Right.
This means that as you sell more, your profit margins keep expanding. It's a beautiful thing.
It's like the digital equivalent of printing money. No wonder investors love software companies.
Exactly. And Wolters Kluwer has seen their profit margins skyrocket, particularly as they've transitioned away from print and towards digital products. One key metric that illustrates this is their return on invested capital, or ROIC. It essentially measures how effectively a company is using its capital to generate profits.
Okay, so how did Wolters Kluwer fare on the ROIC front? Did they manage to impress?
Impress is an understatement. Their ROIC in 2013 was less than 9%. By 2023, it had more than doubled to around 18%. That means they're now generating twice as much profit for every dollar invested.
I'm seriously impressed by their ROIC. That kind of performance is what makes investors dream. And ultimately, it's those juicy profits that drive stock prices upright.
You got it. Investors are always on the hunt for companies that can consistently grow their earnings, and Wolters Kluwer has proven they can deliver on that front.
And speaking of stock prices, let's talk about how they've performed in the market.
This is the part I've been waiting for. We teased that incredible stock surge at the beginning of our deep dive. Lay it on us. Just how much has Wolters Kluwer stock gone up?
Hold on to your hats, because this is where it gets really wild. Since Nancy McKinstry took the helm as CEO back in 2003, the stock, including dividends, has increased by almost 2,000%. Whoa, 2,000. We're not talking about some tiny startup here. This is a well-established global company. That kind of long-term performance is almost unheard of.
It is. To put it in perspective, that's like turning $100 into $2,000. It translates to an average annual return of about 15%, which is almost double the return of the overall Dutch stock market during the same period. They haven't just beaten the market, they've left it in the dust.
So they've created enormous value for their shareholders, but are they hoarding all that cash or are they sharing the wealth?
They're definitely sharing the love. Wolters Kluwer has been steadily increasing its dividends over the years, and they've also been buying back their own shares, which is another way to reward shareholders and boost the stock price. And they've managed to do all this while maintaining a rock-solid balance sheet with low debt and ample cash reserves.
So it's a win-win for everyone. The company is thriving, shareholders are reaping the rewards, and they're well positioned for continued growth. It's a classic example of how a long-term focus on innovation, customer needs, and financial discipline can lead to phenomenal success.
It really is. Wolters Kluwer's story is a powerful reminder that even in today's fast-paced world, the fundamentals still matter. Deep expertise, a commitment to excellence, and a relentless focus on creating value are timeless principles that can drive extraordinary results.
It's an inspiring story and a reminder that sometimes the most successful companies are the ones you've never even heard of. Wolters Kluwer might not be a household name, but they're a true hidden champion, quietly transforming their industry and delivering exceptional value to their customers and shareholders. So keep exploring, keep learning, and keep diving deep. We'll be back next time with another fascinating story. Until then, stay curious.